We just got a 13D that, stated very simply, just is another move closer, in my opinion at least, and those of the people that I certainly rely on, to court, to go into court. I think it's simply as simple as that. You can see what's happening to Twitter's share price. And it comes down to this. You know, he has, of course, as we know, made a significant case about the fact that he wants more evidence about the number of fake accounts on the platform. Seems to maintain that it is far above, potentially, Twitter's estimates previously. Estimates it has shared, by the way, in its public filings for years. And says in the 13D, their latest offer to simply provide additional details regarding its own testing methodologies, whether through written materials or verbal explanations, is tantamount to refusing Mr. Musk's data requests. Twitter's effort to characterize it otherwise, merely an attempt to obfuscate and confuse the issue. Mr. Musk has made it clear he does not believe the company's lax testing methodologies are adequate. So he must conduct his own analysis, and he needs the data requested in order to do so. He's not getting it. And, Jim, as I said, they seem to be getting closer and closer to court because, of course, he believes this is a clear material breach of Twitter's obligations under the merger agreement.
I have to tell you, David, there are many people at Twitter who say, look, he spent a lot of time looking at this. He was satisfied, and suddenly he's not satisfied. That's the kind of thing that in court, in a real court, will matter. And, David, specific performance, maybe we should explain that to people, but that would compel Elon Musk to buy the company. Maybe this is all to get away from specific performance. David, does it have a leg to stand on?
It's unclear to me that it does. Remember, he waived due diligence. That was his choice. He waived business due diligence in order to get the deal done very quickly, and he did. And so he was relying, prior to signing that deal and the NDAs that came along with it, he was relying on public information. Now, clearly, he has plenty of data analysts at his disposal, and one would expect that they are telling him something very different than what Twitter tells the world in terms of the number of fake bots, spam accounts on the platform, Jim. I don't know what that number is. He clearly wants to know it. He was not able to ascertain it based on public information because he waived due diligence. And if they get to court, he's going to have to prove that this is a breach. It could be very difficult for him to do in Delaware, but that would seem to be what he is setting out to pursue right now.
Well, look, I think when you think about what's going to happen, a lot of the things that have happened to Elon that we hear about are with the SEC, which is civil. This will be civil, too, but there'll be a judge. There'll be an actual process. And I think that it won't be done in the court of public opinion anymore. So, David, I mean, it's entirely possible, as flamboyant, as exciting, and as great as Elon has been with manufacturing, in a court, his buoyant personality won't play toward him. David, I think that we're going to hear about this forever, and we're going to get a lot more Elon fatigue.
We are, although forever's coming quickly, because remember on Friday we talked about this, Jim. They've already gotten Hart-Scott. They passed it. There's not going to be a second request. The antitrust review here is done, or is not going to take long. So you could see a vote on this deal within a couple of months. So it's going to play out pretty soon. And the next step, I've asked this question many times already, which is, why isn't Musk already in breach of the merger agreement, since he's clearly not using his reasonable best efforts, as he's obligated to do, to get the deal done? But there's been a choice made on the Twitter board not to push this, not to sue him at this point, sort of take the offensive, so to speak. But one would expect it will end up in Delaware court. Now, to your point, now, and it's important when you brought up about specific performance, that is on the equity. In other words, he is obligated under his contract to come up with the money, the equity. There is one out for him, and that's the financing from Morgan Stanley. If that were to go away for some reason, no reason that you can think of right now, then he would simply be left having to pay a reverse termination fee of roughly $1 billion.